Okay, this is Chris Mulder from TRREB Mortgage, and today I'm joined by a very dear friend and colleague, realtor extraordinaire, Mark Savell. How are you, Mark?
Hey, Chris, I'm keeping well. How are you?
Very good, very good. Mark, why don't you give all the viewers a quick introduction as to who you are, and then we'll dive into the content of this call. And really what I wanted to do was discuss some of the recent TRREB numbers. It's interesting because you and I, as realtor, as mortgage broker, we know these numbers intimately because we talk about it every day. But I think for a lot of our clients and a lot of observers, they don't get the benefit of understanding what's happening daily. So I like to have kind of pull back the curtain and have a conversation between us. But why don't you go ahead and make a quick intro?
For sure. So I'm a realtor in Toronto. I've been selling for, I believe I'm in my 15th year, which is crazy.
Your face belies the amount of experience that you have. You and I started at the same time.
Yeah. So it's been a while. We've been friends for most of those years, which is pretty cool. And primarily focused in the downtown core, a lot of condos, and now kind of shifting more to the housing market. So for the last couple of years, I've really had a good balance of looking at both markets, how the houses are performing, the condos, the move-up buyers. And I think we've had a pretty good set of data to kind of see a trend until COVID hit. And then we're kind of re-establishing what the new norms are and what the new expectations are. So hopefully in this video, we can kind of explain what we're seeing and put some context to what the numbers actually mean, and not just are they up or are they down.
Right. Yeah, because I found it interesting. It was very hard to tell. March was a skewed month, didn't make much sense. April was abysmal. But now we have May to compare to. So I think it's a really important time to look at those numbers and get a better understanding. So anecdotally, before we go, I'm going to pull up some charts and I want to ask you some questions. But anecdotally, how have you found things? Because I find it interesting. We chat and we know what's happening at street level. So are you finding the market to be positive, negative? What's your overall impression right now?
The last 2 weeks have completely 360, like just an absolute turnaround. And I think it's so crucial that everyone kind of looks at April as the benchmark month. And that's going to be the month where pretty much the city shut down completely. And going forward, we really got to look back to how April was compared to that. So what I could say is in April, there was next to no business to be done. You were just kind of finishing off any of the deals you did from months prior, fielding a lot of questions from people that were concerned about the market. But the last 2 weeks of May have been completely, we want to get back in there. You know, let's put a place on the market, let's buy a place. And I think that's all the pent up business that we lost in March, April is now we're feeling it in May. So it's interesting to see, does that carry through to the end of summer? Are we going to follow the same cyclical norms of real estate in terms of May, June being busy, July, August being slow, or will July and August be very active? So interesting times ahead.
Yeah, and you know what I find interesting is okay, there's this sense that maybe there's an opportunity now. So the number of calls I get on the mortgage side for people wanting pre-approvals is because the conversation is always the same. Hey, I'd like to get pre-approved in case the market falls and there's an opportunity. But if everybody's trying to do that, there's just so much pent-up demand. And so I find it really fascinating. And 2 weeks ago, the headlines were CMHC, Evan Siddall, the CEO, came out saying that CMHC was modeling a drop of 9 to 18% in real estate prices. I'm not sure I'm seeing that. I'm not sure I'm buying into that argument from CMHC.
Yeah, I don't know if that was nationwide or if it was citywide, and I don't think it was citywide. Listen, in certain pockets, they're going to feel it. Certain sectors are going to be completely obliterated. Certain businesses are going to be completely wiped out. Yeah, there will be changes in those markets. I can only speak of what I see in the city, and I think demand has always been really strong to live in a major metropolis. The shift that I'm kind of curious about, because I've been receiving a lot of calls of people saying, well, if work from home is going to be the new norm, maybe I don't need to live in the city anymore.
Yeah.
right? So that spill off effect can be a lot of people selling out here, moving out to other suburbs that are,
Hmm.
generally slower or not as high in price, and having little mini booms in these pockets. I think that's a reality we could be
Yeah.
seeing. Like every second caller is, let's move out of the city. And
Yeah.
even for myself, I'm thinking,
Yeah.
how much time do I actually even need to spend here? Could I just do weekdays and then weekends out?
Yeah. What do
So
they call? They call these bedroom communities
yeah,
traditionally, right? Now it's a
it's,
new meaning to that.
yeah. So when I hear these, kind of widespread numbers, I mean, anything's possible. Who am I to say whether yes or no?
Yeah.
But definitely, I think demand for big cities will feel it less than some of the smaller ones,
Interesting.
where complete industries could be wiped out. But it's, a month by month basis, and look how much we've learned in 3 months on how fast things are changing, right? So
Right.
a year long prediction, a 10-year prediction, to me is not the thing to be doing.
Gotcha. Well, actually, on that note, let me do a screen share here and pull up some charts from TRREB. So
Mhm.
this is relating to the most recent May numbers. And what we're looking at here, if you can see my screen, I'll get rid of the sidebar so it expands it a little bit. But this is the volume of sales, and it's showing a 4-year comparison. Mark, why don't you talk a little bit about what's happened here?
Yeah, so I think we should be focusing on the yellow lines because that shows us the 2020 activity. And
Right,
what I was saying earlier was, we were on a pretty predictable path of the way things were going, and we could really see the cycles of the months. So January, February, March, things were proceeding to get better. And if you ask anybody in the beginning of the year, we were on track to have a really strong numbers posted. And then April was clearly the month that COVID lockdowns and social distancing took kind of predominance, and things just stopped. Now, those lack of sales isn't, I mean, one sense, no one's out looking, but also so many sellers pulled their listings. Even a lot of downtown condos put sweeping restrictions that you weren't allowed to show places, period.
right.
So there's a lot of reasons as to why those numbers are down, primarily related to COVID. And then we see a jump into May, and that's kind of that pent up demand,
Right,
that,
right here.
yeah, that I think the headlines were talking about. However, compare that to what we did in 2019, and you see there's a big chunk of business gone for May, right?
Right, right. Huge drop. And for anybody looking at this, the blue bar is May of 2019. The yellow bar down here is May 2020. So big drop. What is that? 50%, or I think it's a little more than that, right? Closer to 60% drop.
In that range for sure. And so that's where it's really important to put context to the numbers, because month over month we're looking great. A 50% increase is a great increase, but
Yeah,
year over year, that's not the case. It's the opposite.
right.
So I guess the point I want to hammer home is when people are reading these headlines, context is so important. Just because we've seen a
Yeah,
jump here, what was it last year, right?
right,
And so that's what this chart really clearly shows, the difference between month over month and year over year. How, yeah, we're
right.
up month, down year.
Right. And I think here's the next chart, which is new listings. So the previous one was the number of sales,
Mm.
but the question is how many people are listing? And you already mentioned that about the condos. It's hard to show condos and all these things. So if there aren't that many listings out there, then sales are going to be down. And I think this chart shows it pretty starkly. It's pretty obvious what's going on. Why don't you talk about new listings?
Yeah, so the same trend, January, February, there's a nice increase going, and generally we would see April and May being the top of that kind of
Mhm.
model. And
Yeah,
as soon as April hit, boom, it just was obliterated.
yeah,
Like you could see how few occurred, right?
right. New listings, and so it really. And the next chart here kind of compares the first two because it's new sales versus new listings.
Mhm.
And for me personally, when I look at this kind of gives me confidence. I as a general observer trying to understand the market, feel quite confident about this because this is showing sales to new listings, what the ratio is. And look, lo and behold, we're right in line. Like May 2020, we are as good as very close to what we were May of last year and better than what we were in 2017 and 2018.
Yeah, and so this is the interesting one because it's purely based on percentages. So it doesn't look at, the wide numbers. It's as a percentage how much is selling, and you're spot on. Like, the activity isn't far off from what we had in May of last year. The reality is there's just far less inventory for people to compete with. And like, personally, I'm an investor as much as the next person looking for opportunities in real estate. And since there wasn't much business to be had, I was on the MLS every single day, April and the beginning part of May. There wasn't.
Guilty.
What I was looking for was okay, what's happening? Are there some great deals to be had? Can you score a detached house for $200,000 less than months prior? It wasn't out there. It wasn't. And even in condos, they saw a big dip in average prices. But I think that's more tied to the amount of sales that didn't happen to really push that number up.
Right.
But yeah, you're spot on. This shows that consumer confidence in May, based on the percentages, it's there. And the last 2 weeks of activity back that up. Actually, last night I was on a showing. It was in Rexdale. It was a detached bungalow, priced at about $750,000. There was 4 groups of people outside because we have to follow the COVID rule.
Yeah.
4 groups of realtors outside waiting to get into this house.
No.
Yeah.
No, so it's happening. And that's so curious because I think, like, why doesn't the media lead off with sales to new listings ratio? I think this is the most important number to really talk about the health of the market. I as a consumer and as an observer of the market would want to know this headline versus volume of sales. I mean, the volume of sales doesn't mean too much to me. Right. It's just, it's sensational. The media needs to be sensational. I think consumers and anybody watching this should really appreciate that. This is the gravy. This is what's important.
Yeah, it shows that confidence is there and that they're on par in the same percentage of what we saw in years prior.
Yeah. And I think this is a good segue into the next slide, because better than sales to new listings ratios, I want to know about prices. So here's the next slide, and it's average resale home price. I mean, I am blown away. If you asked me in March what home prices were going to be into April and May when everything shut down, right? I think it would have been hard to bet against that. But am I reading this right? Am I seeing that prices are higher than they were in 2019 and 2018, approaching what was the peak in 2017?
That's correct. Yeah, they're almost. It's just slightly off from 2017's numbers, and I think that speaks to what we're saying, that we didn't see prices fall. Like, there hasn't been a massive drop in price, and I think we have a gut reaction of, it's like, oh, pandemic prices are going to have to fall. It's too soon to say that. If industries start to close down and massive job losses happen, we can have that conversation. It's quite possible that prices will shift. Right. But in 1 month of a lockdown, you're not going to see a massive drop in price, or over a 3-month lag. You're not going to see this big drop in price. And May's numbers kind of prove that. I think June's is going to be really interesting to see, because May was kind of a half month where things picked up towards the end of May. June, we got this full month of activity. And like, you go look at places, bidding war dates are back on almost every property I'm showing now. So the confidence is there from sellers and realtors that, we'll probably sell over asking if we set it up for that.
Yeah, it's so fascinating to see that, and makes it very hard to predict, because if anybody also is looking at securities markets, the stock markets, they're approaching all-time highs in terms of value per share, price per earning. And yet, especially in the US, it's in shambles. I mean, people are burning down cities. They've been in lockdown. They've never had worse headlines. And yet stock prices have rallied to the highs of March. It just doesn't make sense. And I wonder if when we look at home prices, if it's that similar greediness that's driving it. Is it pent up demand? Is it true optimism? It's very hard to tell. It's very, very difficult to predict what's going to happen in the future with this whole situation.
Yeah, and I think it's such a fluid one that it's impossible to kind of predict based on the trends that we've seen what's going to happen next. There's a talk of a second wave, when a second wave can hit, what that would look like. There's so many factors to kind of play into the calculations to try and see what's happening, that I think just
Yeah.
the fundamentals now are more important than ever before. And it's like, if you need a place to live and you have the means and the job security to do it, no
Yeah.
problem. 10-year
Yeah.
plan, I'm comfortable buying something over that span.
Hmm.
Um, the markets that I think are a little bit more concerning are the speculative, especially the pre-construction industry, where people are purely looking at, what's it going to be over 5 years. I think that number becomes so much harder to try and guess given all
Hmm.
that's happening. But the fundamentals remain true, that if you need the shelter, you have a steady job and the ability to do it, it's fine. And that's kind of the test that I'm bringing all my clients through. Like, do you meet these requirements? Is that the case? If so,
Right.
yeah, let's talk about it. Right.
Yeah. Yeah. And I was going to ask you, what are you telling clients right now? And it sounds like that's the message. Same fundamentals. Do you need shelter?
Yeah.
And can you afford it? Are you stretching beyond your means or not? Yeah.
Yeah. Because you're paying a mortgage or you're paying rent. You're still paying something every month. And
Yeah.
whatever works for you is fine. But if you're going to take the jump into home ownership, you now have the equity on the line that you're,
Yeah.
invested in.
Yeah.
And I think if plans, like 5 years has always been the reality of the rule of real estate. You have to hold for 5 years. Now, so
Right.
more than ever, it might be, make sure this is a 5 to 10 year plan, that if things do change, that you've at least got the time to make it back or to hold steady. Um,
Right.
the general feeling I have, and many others I think have been sharing, is that prices will probably still increase this year, nowhere near the amounts we've seen in previous, but maybe hold steady or a slight bump up or down, up or
Yeah.
down a little bit, wouldn't surprise me. I think you're not going to see one of these, or definitely one of these.
Right. Yeah. No dramatic. Yeah. And I share that sentiment as well. I think it's going to be flat overall. And
Yeah,
frankly, I think it was healthy because the way, if you look back at those charts, the way January and February were accelerating was a little scary. We were in store for something really dramatic.
yeah,
So it'll be interesting to see how things play out. And of course, CMHC has stepped in to tinker with qualification for high ratio mortgages, which is going to affect first time home buyers. So that'll impact the condo market, I think, because most first time home buyers are buying in condos. So it'll be interesting to see how it plays out. Mark, I'd like to wrap up this call. And so if anybody would like to get in touch with you, what's the best way to find you?
Yeah, so my blog, torontolivings.com, I do monthly updates where I kind of look at the numbers and try to put context to what you're seeing. And instead of just reporting a number, I kind of give a story to what I see happening with it. So you can find all my contact information at torontolivings.com. And on Twitter, I'm at Savell Sells.
Savell Sells, torontolivings.com. I'll include that in the post as well. And Mark, I really appreciate your time. I always enjoy your insights when getting your stuff off of the blog. You're a wealth of information, and I think you've got a good pulse on the market. So thanks so much for joining me today.
Awesome.
And
Thanks.
we'll do it again sometime. We'll do it in another quarter. Join me then?
Sure, for sure.
All right. Talk soon. Bye for now.